Gold is going to head fake us all the way along because we're in a secular bull market in gold. That's my belief. Evidence I can point to. I won't get into it because I will just make myself look foolish, but I truly believe we're in a secular bull market. Now, ask any cowboy, bulls aren't easy to ride. So you're going to have these massive, decays in price, $100, $200 drops. But the trend for gold, to me, is significantly higher.
Gold's uptrend extended on Monday, with prices approaching the $2,470 figure ahead of the all-time high of $2,483, which could be tested if inflation comes lower than foreseen. Gold prices eased on Tuesday but hovered near a one-week high, while markets awaited a key U.S. inflation data that could provide further insight into the U.S. Federal Reserve's next policy decision. Chairman of U.S. Gold Corporation, Luke Norman, foresees a significantly higher price for gold as the market begins to recognize the impact of unsustainable government debt, the rise of a rapidly emerging middle class in developing nations, and the inherent fragility of the fiat currency system. He is firmly convinced that we are currently in a secular bull market for gold. Norman also comments on the broader market, pointing out that beyond the big tech stocks, many sectors, such as medical technology, energy, and others, are struggling due to a lack of capital flow. While large investors are finding refuge in tech stocks with their consistent annual returns, the vast amounts of money remaining on the sidelines present a potentially deflationary risk, which he finds particularly concerning. Analysts at UBS Global Research remain positive in the commodities sector, maintaining a constructive outlook over the medium term. Despite mixed economic data and weakening market signals, UBS has decided to keep its top-down allocation low while increasing the precious metals sector to an overweight position. Ultimately, Norman sees a clear distinction between the ongoing bull cycle in metals, particularly gold, and the performance of underlying equities, which are not trading at levels that would normally correspond to the rise in gold prices. Before we jump into more content, consider subscribing and enabling notifications to stay updated with our latest uploads.
Gold is going to head fake us all the way along because we're in a secular bull market in gold. That's my belief. Evidence I can point to. I won't get into it because I will just make myself look foolish, but I truly believe we're in a secular bull market. Now, ask any cowboy, bulls aren't easy to ride. So you're going to have these massive, decays in price, $100, $200 drops. But the trend for gold, to me, is significantly higher. Why? Because relative to inflation, it had not corrected higher and higher. So it's a little bit inelastic, just as the underlying equities relative to the price of gold have not reflected this move at all. So I think gold definitely moving higher. I also am a really big believer in copper. I think, copper is just global demand. The copper was always, people said, as goes China, as goes copper. Well, I think that connection or the disconnection is underway. I think just the demand on copper is getting massive as well. So gold and copper to me are the two most exciting industries to be in. And of course, silver. Silver is when gold goes higher, silver booms. Capital flows, as you said again, other than the big techs that are out there that sway those indices, anything, if you look into meditech or any of these spaces, energy, everything is hurting from the lack of capital flow into these sectors. And I think aside from the fact that, big money can just invest in tech stocks and get an annualized return, the amount of money that's sitting on the sidelines, and again, which is potentially deflationary. But ultimately, I see the difference between the ongoing move, the upside, the bull cycle in the metals, gold in particular, as you asked to, versus the underlying equities, which are not, trading in the range that they would be relative to the shift in price of gold. I always refer to that as being inelastic, and it is. The returns are there. We're seeing companies now coming out with their reporting on these high, on projects with these high gold prices. Eventually, we're going to see capital flow into these sectors, in particular into the gold miners, and that's going to create a hurry up, catch up to the metals price. So that's inelastic in my mind.
The decline of the U.S. dollar, USD, as the world's reserve currency has been a widely discussed topic for years, especially following the global financial crisis, GFC, of 2007 and 2008. While some predictions of the dollar's imminent collapse might be exaggerated, data from the Atlantic Council shows that the USD is indeed being used significantly less globally than it was at the start of the century. According to the Atlantic Council's Dollar Dominance Monitor, the share of the USD in global reserves stood at 58% in 2024, down from 72% in 2002, a 14% decline. Luke Norman points out that fiat currencies are on steroids, highlighting their growing instability despite being essential for daily transactions. He warns that the current system is on the brink of collapse, with signs of strain becoming increasingly evident. This is particularly true for the US dollar's role as the global reserve currency, which is being challenged by initiatives like the BRICS countries exploring a gold-backed trading currency. Let's now turn our attention to the video again.
2008 was probably a good opportunity for a cleanse cycle, which would have been a deflation or deflationary cleanse cycle, which, hey, I don't wish deflation on anyone. Ask Japan, they're 30 years into deflation and it's ugly. It really is. House prices there are nominal. They're nothing. It's just the value of whatever materials. Used homes, you don't go in and renovate. They stand empty. So this global debt is a fiat currency issue, right? And the fiat currencies are on steroids and we buy into it. We're forced to. I mean, we need a daily transactional method to purchase things, to be paid, etc. I'm not saying gold ever fills that void. I'm not thinking that one day I'm going to head to the store with an eighth ounce of gold to purchase something. But it's a great way to store value against this fiat currency, gone wild. Girls gone wild. The debt just continues. The monetary inflation continues. At some point, the wheels fall off. And we're already starting to see, the US is under pressure now as the global currency. The BRICS are wanting to trade now in different methods, whether it be, they're talking about doing a trading currency that would have metals backing it, primarily gold. I'm extremely debt adverse, and I have been for a number of years. And I could rant on to why. I was born in the very early 70s in New Zealand. We were late to come out of the Great Depression curve. So in the early 70s, it was still post-depression in New Zealand. So I was brought up with this: stay away from debt. Meanwhile, the governments that I pay taxes to are just loading us as a population in debt. And it's not going to end well. And again, gold is the only true measure of wealth relative to those fiat currencies. So we've seen federal banks buying massive amounts of gold. And yet the price of gold trades off of, promissory notes on gold. It's really all these derivatives of gold. But physical gold, go try and buying it when there's demand, and there is demand right now. Even physical silver, it's challenging. So I know that was a little bit of a stretch on your question about global debt, but yeah, I think ultimately, I'll use the word again, it is going to be catastrophic, not a matter of if, but when. I think the biggest one obviously is interest rates. That's having the largest impact on our sector right now. However, usually higher interest rates is bad for gold, are bad for gold, excuse me. So it's been quite an interesting couple of months, almost a year now of watching this shift into gold. I think there's just so much going on globally, geopolitically. People are looking for a safe haven. This increase in interest rates has led to a dearth of the entire real estate sector throughout all these booming countries like Canada, Australia, New Zealand, into Hong Kong. And I think just the safe haven notion of gold, and even beyond that, people who are in cryptocurrencies recognizing, including one of my friends who's one of the largest crypto miners on the planet, that having some physical gold along with your digital currencies is a really smart idea.
The pace of de-dollarization has accelerated in recent years, with one key factor driving this trend: the growth of BRICS. Over the past 2 years, the BRICS nations, Brazil, Russia, India, China, and South Africa, along with new members like Egypt, Ethiopia, Iran, and the United Arab Emirates, have been actively encouraging the use of national currencies for trade and transactions, according to a recent report. Additionally, China has expanded its alternative payment system to its trading partners, aiming to boost the international use of the renminbi. While other currencies have struggled to challenge the dominance of the USD, the Atlantic Council noted that there is one asset that has gained significant favor among BRICS members: gold. How do you think the growth of BRICS will impact the future of the US dollar? We want to hear from you. Feel free to leave your thoughts in the comments, give a thumbs up if you liked what you saw, and subscribe to stay connected with our ongoing exploration.